Meantime, this bullish call over at B of A grabbing our attention this morning. They upgrade Apple to buy, establishing 225 from 208, implying more than 20% upside. They see AI features helping drive some future iPhone sales as consumers need to upgrade their hardware to keep up. The analyst behind that call joins us this morning, B of A's Wamsi Mohan. Wamsi, welcome back. Good to have you.
Thanks, Carl. Thanks for having me.
I was thinking of you because you've been with us through the years, going from a neutral stance, upgrading, going back to neutral, and hats off to the B of A desk today. They actually chart the instances in which you upgraded or downgraded, and it coincides pretty well with lows in Apple versus the S&P. Just talk about why now.
Yeah, thanks, Carl. Look, we are very centrally driven by our belief that estimate revisions are what ultimately drive stock performance. We downgraded the stock in September of 2022 when we were standing at much more elevated estimates at $6.50 in Apple EPS, and we thought that they would do $6. Sure enough, they ended up doing something closer to $6 in earnings. As we stand here today, I think the situation and outlook is quite different. We're standing on the cusp of major upgrade cycles for the iPhone, which should drive positive estimate revision cycle. Secondarily, we think that services has got extremely easy comps, and there's a whole plethora of new services, not just for Gen AI, but also on top of the Vision Pro over time that will build to drive services momentum to be much stronger. So our view is that we're standing here looking at positive estimate revisions over the next 2 years, and that makes the stock extremely compelling, especially after a significant period of underperformance all the way from July of last year.
Yeah, you go through some of those numbers. You talk about margins being stable, vertical integration. You also say that legal risks are manageable. I kind of raised some eyebrows. Why do you think that is? Because they can afford to pay any fine, or there's no risk to changes to the model?
No, Carl, I think that the viewpoint is really that we have to take it sort of case by case, right? So in the Google DOJ litigation, for instance, where they get very high margin contribution from Google, $18-20 billion annually, right? This is a significant amount that they get. Now, in an instance where the ruling, let's say, goes against Google, we think that Apple has relationships with other search partners where the economics are actually superior to what they have with Google. And in some ways, we think of the Google agreement partially as a fixed component and partially as a variable component that's based on their TAC rate or take rate. So when you think about it through that perspective, it actually might be negative from a Google perspective. The ruling were to be that for them. But from an Apple perspective, it could end up actually putting them in a better position in the long run and being positive. So you kind of have to dissect each individual case. There's a lot of noise about Europe DMA, which is another risk, right? And when you think about what Europe DMA could do and couldn't do, yes, you might have an alternate app store and there's the risk of side loading, but Apple has many levers. I mean, if you're going off the main app store and trying to buy something, you might compromise on the privacy, on the security, on the integrity of your data. Like, there's so many things to worry about that I think consumer choice is ultimately going to bring them back to Apple. So it just is a case-by-case basis, and if you look at all the legal risks that stand in what we can look at today, I just think they're all ultimately somewhat manageable. Not to dismiss any of them outright, but I think when we look at the puts and takes, we feel pretty good about it.